Alright, what's up guys? I thought I'd just make this quick video before I go to class and just talk about the market in general and things that you should not be doing. First, to get to the market, things could be watched for the market to understand why the market is down, such as the dollar rallying, which puts pressure on stocks. It puts pressure on a lot of things. So when you get the dollar to rally or to break above a dollar, it's going to be hard for a lot of stocks to move upward due to the dollar pressuring everything down, because the dollar is starting to get back to a dollar instead of being below 98 cents. It's starting to get back to a dollar, so hopefully it'll break out of that range. And if you want to trade the dollar instead of forex trading, you can check out the dollar ETFs if you're interested in that. I know $1 ETF is UUP. Check that one out. And if you want more, I guess there's more ETFs, but I haven't seen that many ETFs on dollar trade. I'm pretty sure there's a short dollar as well. Just make sure you're doing your research. Also, I won every single position since Monday, so I had about 4 wins and 1 loss on IMNP. I just wanted to see why, what is this company about? Does it present a good bounce? Why are my people in, why is the people in my chat holding the stock? Mostly because they become bag holders and they don't want to accept the fact that they become bag holders. There's a guy in my chat that bought it at 28 cents. Now the stock sits below, I would say 19 cents right now is what it's trading at, below 19 cents. And I just want to see, what is so powerful about the stock? Like, why does everybody want to hold it? It's completely boring. If you watch the RSI, everybody who is holding their stock is in complete trouble, because it looks like it's going to keep going down from here. Highs of 30 cents and lows of 16 cents. So a guy in my chat is now below 40%, or he is down 40% in that position. And these are things that you do not want to be in. These are things that you want to avoid. So if you want to trade a sketchy penny stock or a stock that's below $1 or below 5, make sure you're watching out for volume. Make sure you're watching out for daily, the daily moving average. Like I said, RSI, whatever strategy that you have, make sure that it fits your strategy, so that way once you place that buy order, you're now in a position to win once the stock starts to tick up. And if it does go down, your downside is very limited. So when it goes down even more, it starts to bounce back up, and you start to see those gains happening. That's about it for, that's all I have for you guys. But just don't be a bag holder. Bag holders are the people that are holding these stocks that are down over 50%, and they don't want to sell because they don't want to incur a loss. They think that the stock will go back over time and is gonna, recover the money that they lost. I'm not sure in time that it actually does. In time, they even, they lose even more. So it's a stock that is down over 80%, and it went from 12 to 1 overnight. This is a perfect example of a bag holder. A lot of people aren't able to sell their positions, so this is why the stock barely moved. A lot of people didn't want to sell their positions. I guess more people added on to it, and also it became under the 5 cents rule. If you don't know what the 5 cents rule is, make sure you research that and understand it. It brings more buyers to the penny stock market or the small cap market, and it's just a fun way to trade stocks. If you have, just research it. I don't want to get too much in detail. Make sure you're researching different terms and definitions, and also chart patterns. Once you're able to identify a chart pattern and capitalize on it, that's when your gains start to come. I would say if you're able to identify a bottom in a stock, make sure you go back more than 5 days. If you go back more than 5 days, you start to see a more accurate picture of where actual support is and where actual resistance is. You don't want to look at temporary support, the 5-day temporary support. I want you to go back months in advance if you have to. If you have to go back years in advance, you can. Remember, this is your money. You're playing with your money. You should be able to grow your money like you want to. So these are things that you have to watch out for. These are things that you should be prepared for. Like I said, go back more than 5 days or more than a month to see if it's support. Say if I know the company that is down over 80%, you go back 20 years or more, there is no prior price that's that low. So this is new lows for this company, and which becomes very dangerous because you don't know where the support or where the resistance is. I mean, well, you honestly don't know where support is. If you don't know where support is, this thing could keep going down. But from what I'm seeing to date in the market, is that it might double just off of the 5 cents rule. It might save a lot of. I would say it might save a lot of people time to just trade it cent by cent. It's just 5 cents to increase the risk, and it also increases the reward. This is the whole purpose of it. So like I said, research it more so you can understand this rule and understand what that rule does, and who's the target market, who's the target market for that rule. So research those. Also, if you want to buy a stock, make sure make sure you're not buying into earnings. Always look up the earnings date and make sure you read an article prior before buying the stock. Thank you. Bye.